welcome back to the Dugascopy Studios here in Geneva. Joining me once again is Mr. Bruno Estier for the technical market analysis. So welcome back, Bruno.
Good morning, Jessica.
So Bruno, 2 weeks ago you were worried about failure of a rebound. So what do you think now?
Okay, what we see here on the S&P 500 is what we feared. For example, that was that this triangle, which was shown here, was going to make a new high and then failed to sustain the move up and came back down. So we'll see that from here it basically came down almost for the 10 last days on a daily closing basis, every close lower than the next one. So here we are now very close to the low of the preceding August low.
So Bruno, where did this weakness come from?
Well, this weakness came from three areas. The first one is healthcare. We see here the relative strength of the healthcare in orange versus the S&P. We see here in September it went down a lot, and a subset of this healthcare is the biotech. And biotech versus the healthcare is here in black, and we see that especially in the last 3 weeks it went down quite a lot. So that area of the market pushed the general index lower, and we see here that it went quite a lot down. The second sector, if you wish, is materials and energy. First, materials, which is obviously linked to commodities and the fact that commodity prices are coming down. Here the relative strength is still moving down, and we have been able to make new lows on that sector area. And we see something similar but less pronounced in energy sector, despite the fact that oil here in black is flat. Relative strength is still moving down a little bit, and of course nominally here the price was rejoining the previous low of August.
And where do you see the S&P 500 in coming weeks?
In the coming weeks, if we take a step back and look at the weekly charts, what we noticed is that first of all, we had an uptrend which stopped around May, accelerated down in July, August. That has been reflected into the moving average here in blue, which was the 40 weeks moving average, which is also considered to be 200 days. So this is something which was moving up, was supporting the market, and now it's turning down. And as it's turned down, instead of being a support, it's going to be a resistance, so it will be capping any rebound. And finally, we have now a retest of the previous low with very oversold indicators here on the stochastic side and on MACD. So it is possible that we've got a rebound. We see also that we have a confirmation of a downtrend because prices now are firmly established below the cloud here. So this area is certainly around 1975 going to be a strong resistance area, a ceiling which will cap the market.
And in your opinion, is the situation similar for Japan?
Well, if we look at Japan, we were looking for the development of so-called descending wedge. We were around here. This is actually ready for a little rebound. It occurred already this morning, but should be capped around 18,000 during this little rebound because of very oversold stochastics on a daily basis. It will probably reach the top of the pattern. If we look at the weekly charts, we notice that fantastically it's just rebounding from the lower part of the cloud, so this is a normal area of support and should remain within the cloud. If it stays within the cloud and not move back above it, that means that there is more chance that it will break down again later on during the coming weeks.
And in regards to other Asian markets, China...
Other Asian markets are relatively similar to Japan in the sense that we are at the bottom of a pattern. It will allow a rebound, also with oversold indicators allowing the market to rebound to the top of the patterns. For India, it's a little bit different because we can spot here very slightly a little rebound, a bit more against the S&P 500. So it's possible that this very narrow range expand a little bit upwards, but we have to realize that we are still under the influence of a main downtrend.
And now for Europe, Bruno, what's your view?
Well, Europe, beside all the economics, all the economic advisors which are telling us that it is a good value, that people should invest in Europe, what the market is telling us is, yes, it is rebounding from the previous support area, 29.70, 29.90. It is displaying a little bit some bullish divergence as the oscillator here is rebounding while it's not making a new low. So it suggests that the market will move up. It did already this morning by moving more than 1%. But we have to realize that it will be capped by either this descending trend line, or if we look at the weekly charts, we'll see that the area of 31.77 is really an area where the market has to move above it to really signal the change from a downtrend to something more sideways. We don't know if we have the chance to see something more sideways. So as long as we have no prices above 31.77, what we'll look for later on is new lows later on in October. So really, all in all, we do have a rebound after 10 days of close down in a row. So people may feel relief, but they should in fact beware this short-term rebound because it's only short-term. It's probably not a change of trend.
Fantastic. Well, Bruno, thank you so much for coming in today and sharing your insights.
You're welcome.
And thank you for watching. For all the latest Jugoscopy updates and exclusive interviews, do keep clicking back. Goodbye for now.